Here's another check on shares of Netflix, down about 1.5% in overtime, but well off the lows. The company's saying its ad tier grew 34% over last quarter, but saying in its shareholder letter, the near-term challenge is that, quote, we're scaling faster than our ability to monetize our growing ad inventory. Joining us now is Mark Zagorski, CEO of DoubleVerify. DoubleVerify is one of Netflix's partners in its advertising tier, responsible for fraud protection and verification. Good to have you, Mark. So give me your take on the situation. It certainly sounds like Netflix has more space to sell ads than it has buyers at a price that Netflix is willing to charge them. So what does that mean for the velocity in growth of this business?
Yeah, I think you nailed it there. Really what they're saying is, look, we're doing well, but we've got more to sell. And I think they're making some moves around getting in a place where they can sell through better. They announced some relationships recently with some programmatic technology companies, specifically Magnite, to help them move more inventory, not in direct sales, but in what's called the programmatic marketplace, which I think is a smart move for them, right? They've got a lot of volume. They're growing nicely in subscribers and ad-supported subscribers now, looking at 40 million plus in that tier. So now it's about monetization, and this is a new game for them. There have been players out there who've been selling ad space across TV and TV-like networks for years, and they've been doing this for only a handful of quarters. So there's some work to be done. But the good news is they're showing really solid progress on the subscriber growth. I think that's impressing everybody.
Yeah.
They've been able to maintain CPMs pretty well as well.
Hold on to your hats, investors. There's a seismic shift underway in the stock market, specifically the entertainment sector, that's capturing everyone's attention. JPMorgan has turned their spotlight onto Netflix, forecasting that the streaming giant could become a significant player in the advertising sector in the coming years and grow to levels beyond their current and already quite huge and monumental level. This revelation is poised to stir up the market, and with companies like Netflix, the possibilities seem quite endless, really. Analyst Doug Anmuth, a seasoned expert, has put Netflix on his radar, citing extraordinary potential for revenue growth and a significant expansion in its ad tier subscribers in the not-so-distant future. So, is Netflix poised to forever hold the throne in regards to the streaming market? Will there be any complications or risks on their way to the top once again? And what should you, the investor, learn from all of this in regards to buying Netflix stock and holding it? Let's unravel this intriguing development, one that could reshape not only Netflix's future, but also the entire streaming landscape. Hello, everyone, and welcome back to Investocracy.
Talk to us about the trade-offs and the difficulty here for Netflix in really charting this out strategically, because it seems to me like, yeah, they could take in a lot of ads if they wanted to, but if they're trashy ads, if they don't really meet the consumer where they are, and if they aren't appropriate to the program that the consumer is watching, that actually ends up hurting Netflix, not only in the long term, but maybe even in the medium term. So what's the needle that they have to thread to do this right, both on that score in the long tail and also making sure that fraudulent activity doesn't happen in the ad space?
Yeah, they really do need to balance the quality of the experience with the monetization of the experience, right? And what that means is relevant ads that are distributed relatively equally across the program so that people aren't saturated with ads and they feel like it's a good experience for them. The great news for Netflix is they have tons of data on their consumers and on the subscribers. They're probably the best in the business with understanding with the details of what their users have been watching over the last few years. So that means they can tailor those ads to those consumers, their specific demands around the kind of content that they're around, and that's a good thing. So they can balance that experience. The challenge is going to be, and this is a whole new world for them, is they're not just competing against other streamers in the space, the Disneys and the Amazons of the world, but they're competing against other technology companies too that are vying for those consumer ad dollars. And folks like Facebook or YouTube. These are new players, and they're new to this space.
Imagine dialing back the clock to 2007. Do you recall the days when the Friday night ritual involved strolling into a Blockbuster store, scanning shelves for that perfect movie? Fast forward to the present, and Blockbuster is a relic of the past, while Netflix has surged to a staggering 278 million global subscribers. But here's the kicker. Netflix isn't just a streaming service anymore. It's set to become a powerhouse in digital advertising. Astounding, right? Doug Anmuth from JPMorgan seems to think so, reiterating an overweight rating and calling it a top pick. Fueled by projected revenue growth in the mid-teens and aggressive monetization strategies, Netflix is on the verge of a paradigm shift. The price target for Netflix? A lofty $750, suggesting a 9% upside from its recent close. That's not just a number, it's a statement of faith in Netflix's robust expansion plans. What's especially interesting is their ad tier strategy. Introduced in November 2022, this move was initially seen as ambitious. But by the end of this year, Netflix is expected to boast 31 million ad tier subscribers, escalating to 42 million by the next. Let's not kid ourselves. That's almost the population of Canada. But before we go any further, if you want to keep up with Netflix's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to the video.
So Mark, if we just look out over, to use the term that Netflix used in its release today, the medium term, what does a fully ramped, ad-supported model, what do those economics look like for Netflix as it does go through this transition?
You know, I think when you look at the opportunity there for them, it's going to be the fastest growing, I think, revenue driver as a percentage of their revenue moving ahead. Now, the numbers are still relatively small in comparison to their subscriber revenue, but advertising revenue is really profitable, right? You know, you're able to actually drive really high margins out of that ad revenue. I think they're going to continue to lean in on that. Not just due to the fact that, you know, it's a nice additional line item, but it allows them to penetrate markets and market segments, not just of consumers, but global markets in which the price point is too high and consumers have reached kind of subscription fatigue of paying a full-loaded Netflix ad subscription or non-ad supported subscription fee.
Anmuth predicts that advertising revenue, sans subscriptions, will make up at least 10% of Netflix's total revenue by 2027. Given the sheer volume of users shifting to Netflix's $6.99 a tier, it's no wonder the firm anticipates that a significant portion of U.S. subscribers on basic plans will transition to this cost-effective option. Why the sudden pivot to ads? Well, Netflix had its wake-up call when it experienced subscriber losses for the first time in over a decade. The addition of live event content, like their recently announced 10-year, $5 billion deal with TKO Group Holdings for WWE's Raw, only adds more flavor to its portfolio. These efforts are not merely aimed at recovering lost ground, but are part of a calculated strategy to diversify revenue streams and build a competitive moat. Let's touch on the numbers sprinkled in these investor reports. Netflix stock plummeted 51% in 2022 due to halted subscriber growth. But guess what? A rebound in 2023 saw Netflix stock rocket by 65%. The second quarter of 2023 alone saw the addition of 8.05 million subscribers, much higher than forecasted figures of 4.53 million. Combined with a 41% rally this year, it's no surprise that Netflix has resumed its growth trajectory. Despite occasional hiccups, like the soft revenue outlook for the third quarter, Netflix's efforts in cracking down on password sharing and infusing original content have been commendable. Think Stranger Things, The Crown, and the wildly popular Squid Game. Hits like these are not just shows, they're cultural phenomena. With more hits such as Wednesday and Ozark, Netflix has proven time and again that it knows how to draw viewers in and keep them hooked. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Netflix says its cheaper ad-supported subscription plan now has 40 million users, and that it's struck a deal to stream 2 NFL games. When? On Christmas Day. For more insight, let's bring in Mark Mahaney, head of internet research at Evercore ISI. We're watching this play out. It's taken years for streaming to see what it's finally going to look like. I've been struck by the new bundles. So it's like what's old is new, and I feel like deja vu all over again. Am I going to have a streaming bundle? That's the way it's eventually going to work.
You probably will, and most people do now. So what's so interesting about this deal is just what it reflects. So Netflix is actually now big enough to economically afford to carry NFL football games, and the answer is yes. They've got 270 million paid subs, and for them, the cost of any NFL game, these two NFL Christmas games, it's the cost of a medium-sized movie for them. So it's already in their $17 billion content budget for this year. And now they've got 40 million viewers. They had 5 million last year at this time. My guess is that next year they'll probably be close to 80 million. And they're doing this globally, too. That's one thing they offer to any content provider, which is that they offer this global reach. Because believe it or not, there are a lot of people who really enjoy NFL that don't live in the U.S. And so Netflix can actually give those viewers an audience.
They have someone that can bargain for which games and matchups that they. I mean, I wouldn't want a bunch of crappy matchups. And you have to have someone who's smart enough to know who's going to be good in advance of the season, don't you?
I guess you do. Somebody hopefully has figured that out. But to me, this is kind of a coming out moment, another coming out moment for Netflix. They're big enough, they're material enough, they're substantive enough, they got the cash to do it. Now you're going to look at more. Several years ago, they said they would never do live sports. They've clearly been creeping towards that, just like they said they would never do ads. Now they're creeping towards that. They're not just creeping, they're engaging it.
Adding mobile video games to their subscription in 2021 was yet another feather in the cap. As if streaming top-notch video content wasn't enough, subscribers can now indulge in over 80 games, spanning action to puzzle genres, on their smartphones or tablets. This, along with a foray into live sports content, including upcoming NFL games, forms a dynamic package for both viewers and potential advertisers. Additionally, Netflix embracing advertising isn't just a shot in the dark. Their in-house ad tech platform and partnerships for programmatic advertising and measurement are poised to play a significant role in driving higher monetization. Anmeth acknowledges the challenges but remains optimistic that Netflix's multi-year execution plan will bear fruitful results. Jokes aside, the stock market can sometimes feel like a roller coaster ride with price swings and dips. But if you're eyeing a potentially lucrative opportunity, Netflix, with its proven resilience and innovative strategies, could very well be the ticket. The market largely agrees, as evidenced by the massive surge in upfront advertising commitments this year. So, what does all this mean for the investors pondering over their next move in the market? Considering the recent trends and strategic initiatives, Netflix is rapidly evolving into a diversified entertainment and advertising behemoth. Its current state shows promise, lighting up investor charts with a growth rate that few anticipated just a couple of years ago. With projections indicating a steady rise in ad-tier subscriptions and a flourishing advertising revenue stream, Netflix finds itself on solid footing to achieve critical scale. Holding an IBD composite rating of 98 and a relative strength rating of 90 out of 99, Netflix undeniably stands strong against its competitors. For growth-focused investors, Netflix resides in the upper echelons of the industry, making it a prime candidate for those looking to leverage long-term stock appreciation. As it stands, Netflix's impressive trajectory coupled with an innovative approach to monetization makes it a compelling option for potential investors. So, what are your thoughts? Do you believe Netflix's strategic pivot toward advertising can propel its stock upward? Engage and share your opinions, because when it comes to investing, every insight holds value. And finally, if you would like to know what companies like Netflix have been up to these past few days, go ahead and click on the next video on your screen. See you there!